Hey everyone, welcome to another session of Inside the Markets with Caleb and Brown. Today we're going to detail the month of October that has since passed and the exciting month of November that's ahead and the rest of the year. So, getting right into it, October didn't quite arrive this time around for crypto. It's the first time since 2018 that we haven't had a positive close for the month. Unfortunately, we were instead hit with a $19 billion liquidation across the market, the single biggest liquidation in all of crypto history. We started October really well. Bitcoin hit a new all-time high around the 6th of October or thereabouts, and then things started to crash down afterwards. TradFi indices pushed higher, highlighting how leverage amplifies volatility in crypto. Crypto and traditional markets are still paired. If there is negative sentiment in the traditional space, it's very rare that crypto is going to survive that downwards pressure. Sentiment was shaped by Fed policy uncertainty, the US-China trade dispute, and the extended government shutdown. That has not done wonders for the month of October, and it has really killed that dream of having, a 7th October in a row, which would have been quite beautiful to have. So rate cuts and hawkish voices. The Fed ended up cutting rates by 25 basis points. That was priced in, so it didn't really do anything for the market. Unfortunately or fortunately, with the rise of prediction markets and access to information being so quick and easily attainable these days, it's more so buy the rumor, sell the news more than ever. The 25 basis point cut was very much priced in, and thus nothing really changed. We're currently looking at a 70% chance of another cut on December 10. If that cut is more than what the market is pricing in, then we could finish the year in a very optimistic way. But at this point in time, things look to be somewhat predictable in that avenue. Jerome Powell highlighted strongly differing views within the committee, signaling the easy money phase may not last. Government shutdown extends into November. The shutdown is now in week 6 at the time of recording. 670K furloughed, 730K working unpaid staff members in the government of the United States of America. Missing data makes it harder to gauge the real economy and the real impact of this. A lot of the time these events will happen and the data and the statistics, they come so much later, we don't know the full implications at the time of the events transpiring. CPI came in slightly softer, 3% versus the forecasted 3.1%. Bit of a relief rally, I suppose you could say, with that, but it was shortly lived. A lot of these big economic indicators, they're great or not great if you're a short-term trader trying to scalp small wins in the market. But in terms of long-term investors, which is the makeup of 99% of our client base, these things are rather insignificant, these short-term movements. As we mentioned before, no October for Bitcoin. Record liquidations rocked the market despite an all-time high of 126K USD per Bitcoin on the 6th of October. The sell-off unwound numerous weeks of gains as leverage flushed out. It was the biggest wipeout the market has ever seen, by a mile, more than FTX collapse, more than anything like that of the years prior. Now, it is worth prefacing that Bitcoin priced over $100,000 does in and of itself mean that the dollar value of any liquidations is, you'd assume, would be a lot higher. The market cap of crypto is drastically higher than what it was around the FTX downfall. But nonetheless, no matter how you look at it, it was categorically the worst liquidation event the market has ever had. Bitcoin closed October down 3.7%. This is the worst close as a percentage for Bitcoin since 2018, which for a lot of people who have been invested for a while was in the midst of a pretty terrible bear market. I think Bitcoin closed October in the 3,000 to 5,000 US dollar mark or thereabouts. Pennies on the dollar compared to what Bitcoin's priced at now. Historically, November is Bitcoin's strongest month. On average, it actually is plus 42% in the month of November. Some optimism here. If there is a recovery for Bitcoin, which it could very well be the case, if we see Bitcoin up 42% by the time November ends, that is going to be extremely bullish for the market. If Bitcoin absorbs all that market share, and it may position itself in such a way where it looks like history will repeat itself, we get that colossal growth in Bitcoin, that colossal growth in market share, followed by more momentum swinging into Ethereum and some of the higher market cap alts, and then alt mania as all that new liquidity floods into the market. That could very well be the case if we do see these soaring prices of Bitcoin. But where the market's currently sitting on the fear and greed index, a lot of investors are not too confident we're seeing a 40% swing upwards and staggering all-time high for Bitcoin this month. So further in regards to hope for November, as you can see in the highlighted part of this chart here, yeah, November's neither here nor there. October is the one that is predominantly green year on year. November is green typically if October is green, and then red regularly if October is red. Do with that information as you see fit, but we may not be in for the greatest November. So for this November so far, at the time of recording, Bitcoin is down about 5%, but it did see a 3 to 4% bounce earlier this morning, Australia time. It really could go either way, as we know in this market. If liquidity improves even slightly, November could flip positively very quickly. So keep that degree of optimism. Now we're going to talk about exchange reserve collapse. This is one of the kind of critical indicators in the space. Bitcoin reserves on major exchanges fell to 610,000 Bitcoin. This is the lowest in a year. That is a very optimistic sign. Without the Bitcoin on the exchange, the Bitcoin is not ready to be sold. Coins are moving to cold storage and ETFs. This reduces sell pressure, which is critical if we want an environment of flourishing price performance for Bitcoin. Analysts call this structure a beach ball underwater setup. Suppressed supply often precedes sharp rebounds. With things being pushed down and supply leaving the market, the opportunity for that colossal growth and that spike in price performance is possible. Long-term holders continue to accumulate despite volatility. That is a key that's always worth noting here too. Low volume pre-rally setup. Further to the previous slide, today's low volume environment mirrors prior pre-rally periods. Now, what's happened in the past is not necessarily indicative of what's going to happen in the future, but it is factually things that have happened which we can benchmark and try and draw some analysis or assumption from. In the past, we have had similar environments where there's been low volume across Bitcoin and the altcoin sector, and it has enabled that easier growth if sentiment quickly changes. This is historically followed by 100 to 180% gains over 12-month periods. Again, we have had bull markets and bear markets in the past. We've had periods where things go south and things go north. However, this environment has historically been the foundation of better market volatility to come. Volatility cuts both ways, so large drawdowns often precede the biggest upswings. With the knowledge that October we saw the biggest drawdown and liquidation event in crypto history, and we also know for a fact that every great bull market has had these massive sell-offs where people trading with leverage, loaning against their crypto, have capitulated. We know it's a necessary evil for a flourishing, growing market in this volatile space. There is some optimism in that. The key is staying invested, focusing on cycle structure and doing your own research. Have a plan and no one goes broke taking a profit. Critical thing to remember there. Next up, Ethereum under pressure, but institutions hold strong. Since April, 70 corporations added 5.3 million units of Ethereum to their treasuries. That's $21.7 billion worth at current prices. ETH ETFs added 6.8 million units of Ethereum, $28 billion US. Over the same period of time, institutions now hold around 10% of total ETH supply, which is insane. This shows rising TradFi interest and diversification of investor profiles. Moving forward, alt season watch. Why it's not alt season yet. Alt season is probably the only thing anyone really cares about at this point, given the majority of the market is already used to seeing this great upswing in Bitcoin. Ethereum started to come back a little bit, but it's barely even touched prior cycle all-time highs. XRP has touched prior all-time highs, as has Solana. But the only coin that's really had that colossal money-making opportunity is really Bitcoin and a handful of alts that have very little trade volume compared to Bitcoin. October's liquidation wiped out a lot of these speculative longs, reset positions, but killed short-term momentum. So a lot of that short-term momentum that we started to see at the start of October when Bitcoin hit that new price, that's when you'd see a lot of people on YouTube, Twitter, all over the internet saying, Bitcoin's going to cap out at this all-time high. We're going to get money flowing into alts. And unfortunately, that just was not the case, despite that regularly being the case in prior cycles. Macro overhangs. There's Fed uncertainty and the government shutdown. This keeps traders risk off. People are not wanting to deploy capital with this much uncertainty in the market. Liquidity is also still low. Volumes remain well below early 2025 levels in the market. The ETH BTC ratio hasn't broken higher as well, which historically is required for alt season. We saw a couple months ago when ETH was getting over that $4,000 price point and Bitcoin was stagnating. We're starting to see the hallmarks of history repeating itself, where Ethereum starts to catch up to Bitcoin's performance and we see that flourishing altcoin market. Unfortunately, we got caught off early in that, but the cycle's not necessarily done yet. Maybe there's more Bitcoin dominance to come. Maybe that ETH BTC ratio has more room to go. Maybe an alt season is ahead of us. So looking further ahead, two major ones to look out for. December 10, we have the FOMC rate decision. As we mentioned before, 70% priced in outcome. If cuts are greater than what the markets are suggesting, then perhaps we're in for a fantastic Christmas period and end to the year. The China trade deal to be finalized, date TBC, but as we know throughout the last 12 months, word of tariffs, worth of China trade deal is really one of the most critical events to disrupt or empower this crypto market. So some final thoughts here. Rate path uncertainty keeps markets on edge. Shutdowns and tariffs distort macro signals, and they keep investors and new capital inflows at bay. Bitcoin and ETH show long-term accumulation strength. Liquidity remains a deciding factor for 2025 and 2026 as we enter that. Stay patient and disciplined throughout the noise. Thank you very much. Pleasure. Until next time.